Good morning. Welcome to IG's early morning call. It's Friday, 19th of January. Let's take a look at the headlines as we wait what looks like to be a slightly stronger start across the European markets. And in fact, things are beginning to pick up on the upside in terms of equity indices, but sterling is very much on the way down. Back foot because we've seen some really disappointing retail sales for the all-important Christmas period this year. There was a contraction of 3.2% in December, month on month. Now, this is the biggest decline that we've seen since January 2021, when you'll remember that we had lots of constraints for the consumer because of the lockdowns that were continuing. It was a really disappointing Christmas that year, and that fell over and spilled over into January. And that was the last time we saw this sort of disappointment in terms of retail sales. Let's take a look at what else is happening around the markets on this Friday morning as we continue to monitor some inflation data. This time it's the turn of Japan, where we've seen some data coming down showing that inflation is beginning to slow again, excluding food and energy, down for a fourth straight month. Now, the Bank of Japan meets next week. Looks like the pressure is off Mr. Ueda and his team again as we see January come through. Could well be we might get an increase in rates in April from Japan. And also, we've got a continuation of this look at what's happening in the oil markets. A breakout on the upside, a bullish breakout on the symmetrical triangle. We've got WTI and Brent up what looks like to be for the week overall. Yesterday, we saw crude oil stockpiles fall from the EIA on strong demand coming through from refiners. Take a look at the volatility markets. Last couple of days, we peaked above this falling line of resistance, but we're back down there again today, indicating that people are prepared to take on more risk. And you can see this actually coming through in the equity markets. The FTSE 100 yesterday bouncing off this area of support. And a second day in a row of gains. Relatively good day actually across many of the world's markets yesterday. And that looks like it's going to pick up today. 75.06 is where we are on the FTSE 100. At the moment, looking for gains at the start of today's session. This is mirrored in what was a very strong day yesterday, relatively speaking, a very bullish candle yesterday from the German DAX, up again today, 16,638, looking for a stronger start there. French luxury goods did much of the upside trade yesterday on hopes that Chinese demand will continue to rise. We've got evidence to suggest that China is quite happy buying into luxury goods, and the French market's particularly good in this area. And we've got to build on that today at 74.47 on the markets. I can't read my numbers this morning. Back up above the 50-period moving average. So gains across the European markets as at the start of today's session. And this is mirrored as well over much of what happened in the Asia-Pacific region. If you take out some of the Chinese stocks, which weren't quite so happy, you can see the Hang Seng stock index there down almost 1%. When last looked, that market's still trading. A recovery on the Australian markets by a margin of 1% in today's session in what's been a pretty disappointing week overall. But look at that Nikkei up 1.4%. I want to show you the chart because we're back up above, or have been in the session today, back up above the 36,000 level. Yesterday, we closed above that for the very first time since all the way back in January 1990. So we are around 4-year highs for this market. Remember, 1989 is the all-time record high at 38,950, and we're still quite a distance away from that in terms of the moves, but nonetheless, the market's still benefiting from what is overall a weak Japanese yen. We'll take a look in some more detail about the weak yen in just a couple of moments' time in the context of that number we've seen out today from CPI in the Japanese economy. Let's go back on to take a look at what's happening at equity indices, this time across Wall Street as of yesterday's close. As I said, it was a pretty good day pretty much across the markets, and in fact, growth stocks doing particularly well yesterday with that NASDAQ up. US Tech 100 on NASDAQ on the IG platform at a new all-time record high. We've got just striking out to new all-time record highs again today. It's the very first time we've been up at 17,064.8. So that's breaking news as we get it at the moment on the IG platform. And the money going into, broadly speaking, stocks across the US yesterday was still not up at the records on the S&P 500. We're building on the strong candle yesterday on the S&P 500 and the same sort of price action on the Dow. Again, away from record highs we've seen the last couple of weeks, but nonetheless still on the way up on the session in today's trade. So if you're exposed to the US markets, that's looking pretty good. Let's take a look now at that economic data out overnight, which has been affecting the Japanese yen. The latest inflation data published in the Japanese economy overnight could give the Bank of Japan a little bit more room to breathe when it comes to the interest rate decision next week. Headline consumer prices out in Japan rising 2.6% in December year on year, down from 2.8% in November. This is the slowest CPI growth since July 2022. Now, the core consumer price index, the CPI, which excludes fresh food but includes energy costs, in December rose 2.3%, marking the slowest rate of increase since June 2022, followed a 2% rise in November. Now, a slowdown largely due to an 11.6% fall in energy costs. Food prices continued to rise in December, albeit at a more moderate pace, according to this data out overnight, which means that the so-called core index, as the Japanese finance ministry chooses to focus in on, that takes away both food, fresh food and energy prices, rose 3.7% from this time last year after 3.8% gain in November, slowing down for a fourth straight month. Now, I want to show you this chart here. This is the Japanese yen. This is the dollar rising against the Japanese yen. You can see the dollar rising against the weaker yen. This suggests the Bank of Japan is becoming more convinced that Japan will see positive wage and cycle growth this year, wages and service price rising in tandem. Economists really want to know whether wage hikes accelerate enough to give households purchasing power. Until that happens, they really don't want to raise interest rates. So this is seeing weakness in the Japanese yen, you can see here. So Japan's expected to maintain its ultra-low interest rates at next week's meeting, but some analysts believe that a steady rise in prices and services over the next few months may stir the Bank of Japan to come in with an interest rate rise in April when it next produces its next set of monetary policy data, which we'll get on Tuesday. We'll get a full ream of data coming through the Japanese economy. So at the moment, weakness in the Japanese yen demonstrated here by this strong US dollar. And I think next week, I'll send a video out on this a little bit later on this morning. This is definitely where there's going to be some volatility next week, or certainly could be, depending on what Mr. Ueda says when he delivers his speech, following on from the decision on Monday from the Tuesday on the Bank of Japan, where no move in interest rates is expected. UK retail sales fell much more than expected in the month of December, the all-important month, of course, including Christmas and New Year, and the fastest rate of contraction in 3 years. Let's take a look at the data as we've seen it break today. This, of course, will raise concerns about the health of the economy at the end of last year. The quantity of goods bought in the UK fell 3.2% between November and December, reversing a 1.4% increase in the previous month. Now, this was a much larger contraction than the 0.5% fall that economists had been looking for, and a 1.1% year-on-year figure. Back in January 2021, when we saw this sort of level of contraction, the coronavirus restrictions affected sales. Non-food store sales volumes falling by 3.9% in December, following a 2.7% increase in November. Food store sales volumes falling by 3.1% in December, from an increase of 1.1% in November last year. So whichever way you cut it, we've got lots of negativity for sterling today, and that's exactly what's happened. Let's take a look at the chart. These are 5-minute candles. You can see we're now 40 minutes past the release of the data. You can quite clearly see here this drop in the candle that we've seen on the 5-minute chart. This is against the euro. Just going back out to the daily chart, you can see that, broadly speaking, we're holding on to much of the gains that we've seen most this week from sterling against the euro. We've seen some quite strong CPI data coming out, which will concern the Bank of England for sure. JP Morgan Chase yesterday talking about August was now the point at which they fully expect the UK central bank to cut interest rates. Let's take a look at what's happening sterling against the US dollar. Same sort of price action today on the way down. This is the daily chart. It was stirred on the downside, but broadly speaking, holding out on to the gains that we've seen for much of this week so far. So we've got a far more disappointing number for retail sales than expected in the UK for December. It's not just the UK. We've seen some inflation data. We've also seen some inflation data out in the German economy. These are producer prices falling by a margin of 1.2% in December month on month. And that is a disappointment on the downside. That missed expectations. Meanwhile, over in the US, a couple of indicators are due out this afternoon, which could stir some interest around the dollar. Michigan consumer confidence, economists expecting it to rise marginally to 70 in January from 69.7 in December. This would take it to a 6-month high. Existing home sales forecast to rise by 0.3% in December month on month. This would be in the second straight month of gains for the indicator, something unseen since the second half of 2021. Let me show you what's happening with the euro-dollar trade around all this. And bearing in mind today, we've got some central bank commentary today in the US. Also, Christine Lagarde speaks officially at the Davos conference today, and that's likely to be of interest to those that trade the foreign exchange markets. We're absolutely on this line of support at 108.83, 61.8% retracement on this move that we've got here from the lows we had back on the 8th of December. Watching out for that US data and some of the central bank announcements and more commentary from Davos today that could move the foreign exchange markets. Now, let's take a look at the corporate news headlines. Just one company of note worth watching this morning on the London markets. That's going to be Deliveroo. Remember, this week we saw some positive commentary coming through from Just Eat Takeaway. It certainly seems like it's rubbed off on Deliveroo as well. The company has raised its 2023 earnings forecast. This is the meal delivery company, of course, for those that don't know. It says that 2023 earnings will be slightly ahead, that's the full year, of the 60 to 80 million it was previously expecting. Let's take a look at the figures in some detail. The revenue rising 1% at constant currencies. Gross transaction value, that's GTV, rose 3% in the quarter, while the number of orders remained flat. Yesterday, its competitor Just Eat Takeaway said it will close its in-house delivery service in Paris, a move that could impact around 100 jobs. Now, that's a cost-cutting exercise. That was seen as positive, broadly speaking. We got what was all at the end of yesterday, in fact, a negative swing to the Deliveroo share price chart. If we look at what's happening there, you can see that yesterday ending down at 134. I quite like the look and shape of these figures. The big question is will we or have already seen the upside coming through from the report on Wednesday from Just Eat Takeaway, which was pretty good, which is why we saw this rise midweek for Deliveroo. But Deliveroo basically mirroring what's been happening, as opposed to Uber and Deliveroo, whose self-employed couriers do much of the work. Just Eat has championed employing its own couriers in Europe. This has put the group at a competitive disadvantage in France as a result, which is why they've decided to change the way they do things there. In 2022, Just Eat abandoned in-house delivery operations in most of France. Let's just quickly take a look at how Just Eat Takeaway ended yesterday's session. JET is the ticker there for that. Quite a strong day yesterday when all was said and done. The in-house delivery operations for Just Eat was abandoned over much of France in 2022. It now uses a third-party courier service which uses self-employed couriers. Just Eat will now move to a similar model in the French capital. So that was the news yesterday. The stock was up, and it's been pretty much a good week so far for Deliveroo. Now, the company formerly called Schlumberger, SLB, will report its quarterly earnings before the start of today's session on Wall Street. Let's take a look at what the market expects there. Looking for 84 cents a share to be compared with 71 cents this time last year. It's been a pretty good year on the whole for these oil companies, broadly speaking. This is an oil field services business. Revenue, just short of 9 billion, 1 billion higher than the fourth quarter last year. I want to show you the share price chart. Schlumberger, far better off than it was this time last year. And if you look at, in fact, that's a lie, actually. Let me just quickly show you where we were this time last year, because in fact, we are actually slightly worse off than we were this time last year when it last reported earnings at this time of year. But what I was going to say was we're off the lows that we saw in the middle of last year. $48.56 is where this is going to open this morning. One strength of the company is its international presence. The vast majority of its sales come from international contracts. Now, in Q3, for example, its revenue outside the US amounted to $6.6 billion, up 12%, compared to revenues of $1.6 billion in the US, up only 6%. Earlier this week, SLB announced its intention to expand its activities as well in Algeria, which is an oil-rich nation. Talking about oil, let's move on to what's happening with the oil charts. We've got a breakout on the upside of this symmetrical triangle pattern here. And technically speaking, the recovery in this down move here we have for Elliott wave, the recovery period is still on. It's a question of where that will end. Got a breakout on the upside, measure the height of this triangle, which I've done here already. When the breakout comes, that's the height of the recovery. And that actually would take us up. Let me just move that up there. That would take us up to 85.58 on Brent if that recovery continues in the direction of travel it has already made out in the last day or so. So WTI and Brent rising for a second consecutive day yesterday and building on that at the moment, helped by the latest EIA data. Now, crude stockpiles fell more than expected after strong refiner demand, showing a decline of 2.5 million barrels in crude oil stocks, while gasoline and distillate stockpiles rose. Now, the market awaits the Baker Hughes rig count at 6 o'clock this evening. Let's take a look at what we saw this time last week. It was a little move last week. Total rig count fell by 2 to 619. Number of producing oil rigs fell to 499 from 501 last week, the first full week of 2024. Let's go back to the charts and just check in once again what's happening with one other aspect of the markets. It's positive day today for the price of gold, second day in a row, bouncing off this line of support at 61.8%. I don't have a position on this. I don't know where it's going next. I had originally thought that we would get a recovery back up to 21 level, but the problem is with that is you've got a stronger dollar. And so long as the dollar remains strong, I think that is going to be an issue. You can see here we're holding on to recent gains today. We've been capped out of the 200-day moving average for the dollar basket, but nonetheless, it is up at elevated levels. And in fact, last couple of days, we've seen the highest print in the dollar since the 13th of December. And I think that's as good a reason as any to keep gold pretty much where it is. On the other markets around what's happening in the commodity complex, this is copper. I've been talking about this Elliott wave, 5-wave up, then you get the 3-wave down. Unfortunately, what's happened, this A wave has now come down and it's met that 4th wave. So I think technically speaking, this is now over. So what we can do is we can get rid of these Elliott waves. But in fact, what I now see is happening is this, which I think in some respects is possibly more of an interesting pattern to follow, where we get this move that we've got. My apologies, I seem to have mucked that up. But the move in the, let me just take that off. The move in the markets here for a head and shoulders pattern is now picking up with this market. Now there's the head, and we're coming down here for the second shoulder. Now the next thing is the question mark about how far up this then goes onto a potential another move, and then I would expect it to pull down here. So that'll be something I'll be following up on in the next few weeks or so. This head and shoulders, which now looks like it could well start to develop. If you're long on this copper chart, stop goes underneath the underside of yesterday's trade, around about the 82.50 level. 83.50 is where we're trading, and we'll have to see how this upside develops. It could well be that this right shoulder might be a little bit weaker before we see another downside. Who knows? We'll have to see what happens with copper in the next few days. But it hasn't been a particularly good week for many of these base metals. Yesterday was a down day on nickel, up a little bit today. BHP saying there's going to be a nickel surplus this year. Aluminium on the way down again today. Big decline since the beginning of the year for aluminium, and that seems to be picking up on the downside as well. So not much appetite for some of these base metals. That's it. We've got about 10-15 minutes to go before the start of today's European session, looking for gains across the board, despite the fact we've got sterling on the way down because of that weak retail sales number. But I think that the markets today are going to be more interested in the prospects, possibly, of more discussion points around interest rates. We'll get some more details from Christine Lagarde from Davos a little bit later on today with an official speech there from her. She was out earlier in the week talking at Davos about the prospects for a later cut in interest rates. And that certainly seems to be borne out by some of the big investment banks who now have an opinion on what's happening. They're now looking potentially at pushing out Bank of England interest rate cuts out through now into August, not as early as early summer as some had been hoping for, or late spring as the early expectations were, as inflation seems to remain sticky. That's the message going into the start of today's trade. Still looking for gains across the European markets.